If you are tired of staying at the chart all day but still want consistent profits, swing trading might be your secret weapon. By the end of this video, you will know exactly how to spot swing trades, enter with position and manage them for maximum profits without being glued to your screen. Now let's talk about swing trading. Swing trading is a type of trading whereby you hold your trade for days or probably months. Being in one position for a very long period of time is what we call swing trading. Now, there's a difference between a swing trader and a day trader, also with a scalper. Now, a day trader can be in a particular trade for at least a maximum of 2 days, but a swing trader can be in a trade for at least 1 week, 2 weeks, or probably 1 month. Meanwhile, a scalper will just dive into the market and exclude out from the market sharply under minutes. So now, if you're a worker, you go to work in the morning, or you're a student, I think swing trade is the best option for you, because with swing trading you are not glued to the chart. All you need to do is to do analysis in the 4-hour time frame, and you place your pending order and you're out of the market. You come back and check it in few days or few months, and probably there's money in swing trading. The high win rate in swing trading is always high than to compare to others. Now, we have only one better market condition for a swing trader. If you're a swing trader, there's only one and only one better market condition for you. That means if the market is trending, then that will be a very good time for you to swing trade. If the market is either moving to the upside for a very long time, for like moving to the upside for like months or days, or market is moving to the downside for that probably months or days, then this will be a perfect time for you to be able to swing. But if price is consolidating, going from one junction to another, I think you stay out from the market, because you will not see a better opportunity than only for you trading support and resistance until price take you out as the liquidity. If you stick with me, I'm going to show you how to identify a clean or good market conditions for swing setup. Now, in this particular scenario, we'll be using only 3 time frame. Number 1 time frame is our weekly time frame, our daily time frame, and our 4-hour time frame. As easy as that. Now this is GBUSD. Now this is GBUSD, and if you want to do your analysis as a swing trader, I will advise you to mainly focus on the weekly time frame. So guys, this is our weekly time frame for GBUSD, and in our weekly time frame, let's see what the pot price are for us. And remember, we'll be looking out for liquidity, because liquidity drives the market. Price move where there is a liquidity, you understand that? So we'll be looking for our liquidity area. Now I'm analyzing the market as a swing trader. Now you analyzing the weekly time frame, you can see so many lot of data years back from 2010, 2013, 14, so many lots of data to this one 2022 till date. We'll be needing all of them. Guys. First of all, let's dive into our current market structure. From our weekly time frame, you can see we are bullish. GBUSD is trending to the upside from our weekly time frame, and this will serve as our buy side liquidity. Also, price has already swept liquidity from here. From our daily time frame, price has already swept liquidity from there, I think this week, and this will serve as our sell side liquidity. You can call it the swing high and our swing low. We mark that out in our weekly time frame. And again, let's dive in down to our daily time frame. In our daily time frame, we mark out our structure. Now from our structure in our daily time frame, you can see price already changed character and is about to move to the downside. But from the weekly time frame, we are still bullish. But confirming from our daily time frame, we are changing character, because this is our last break of structure to the upside. Before, this is a liquidity sweep, and this is our change of character to the downside. This is what we have in our daily time frame, and from our daily time frame perspective, I think we are about moving, or we are about turning from a bullish movement to a bearish movement. And one thing I'll consider is that if in your 3 time frame of analysis and the 3 time frame are not moving in one particular condition, I think I will advise you to stay out from the market. Now, when looking at this particular trade, you can see from our daily time frame we are bearish, but in our weekly time frame we are bullish. We are going to wait for our weekly time frame, our daily time frame to align with the weekly time frame. Is either price taking out full liquidity residing above here and pushing to this upside, or price should go down and tap in to this fair value gap over here. You can see our fair value gap over here. This is our fair value gap. Okay, and another fair value gap is being spotted over here. Okay, so now I think it may be easy for price to push down here, fill in this fair value gap before going up here, or price will just keep pushing to the downside and taking out this sell side liquidity. You understand that? So now let's go down to our 4-hour time frame to see what we have in our 4-hour time frame. Now, 4-hour time frame will be our entry time frame. Remember, this is our order block from our daily time frame. All this is our order block from our daily time frame, and in our 4-hour time frame, let's mitigate it. Mitigating this particular order block to this particular side to here. This will be our order block. Price has already tapped in our order block, but we can't just dive into the market without any market entry model confluence. Now, all we need from price to do is to create what we call a change of character to the downside, or a mitigation block or a breaker block. Then we will consider selling this particular market as a swing trader. So now this particular market is not yet ready for us as a swing trader. We need more time before considering selling GBUSD or not. I would love to show you guys a live example. Now, for my live example, you can see this is what we have. This is BTC. This is our weekly time frame, and what we need to do first of all is to mark out our swing high and our swing low. Our swing high should be here, and our swing low should be here. For our weekly time frame, you can see our fair value gap over here, but before price will be able to come down to tap into this fair value gap, it might take months. We are only focused on this recent price movement. We only focus there. So after doing our analysis on our weekly time frame, let's move down to our daily time frame. In our daily time frame, you can see this is what we have over here. This is what we have. Now, what we'll be expecting from price to do is to either sweep to the upside or sweep to the downside. That's what we'll be expecting. If price sweeps to the upside, then we'll be looking more forward for a buy positions. But if price should sweep to the downside, we'll be looking for a sell position till this particular sell side liquidity. That's what we'll be looking at for. Or let's go down to our 4-hour time frame to see the structure being formed in our 4-hour time frame. In our 4-hour time frame, this is what we have in our 4-hour time frame. Now, this is already been clear. You can see liquidity. All these are liquidity. The price is going to sweep to the upside. I think we'll be looking for a very massive and sweet entry over here. Let's watch and see. Now remember, we are waiting for a breakout. While waiting for a breakout, let's mark some things out. This is our break of structure, our current break of structure to the upside. Remember, we are still bullish. And our order block, we expect price to tap into this our order block, and this is our liquidity. If price can tap in here, then we are good to go. So eventually, guys, price didn't tap into our order block, and price did what? Break out from this particular zone and sweeping out this our weekly higher time frame liquidity area. So let's see if we can still push down again to this particular, this entry is still valid. Let's see. Now that we have seen something like this, all we need to do is to look for our entry, because this, we're going to use this particular strategy, a break and a retest. So let's mark this particular place out, because this is a break of structure over a very tiny break of structure. So let's mark all of them out. Now we're expecting price to tap in down to this particular place and give us a buy entry, because we are bullish, so we're not going against the trend, so we're still going to buy. Price eventually tapped us in, but we're not yet in because we don't have any entry model. Let's wait for a clean and pure entry model. Okay guys, we just gotten our entry model, and you can see with what I just thought, I think this is our breaker block. From here to here is our breaker block, so that is where will be our entry. That will be our entry. If price should retrace down here, we'll be entering there, and we'll be setting our stop loss below here, and our TP should be above here. That is 1:3. Let's do it 1:3 above there, but we are going for 1:3. Let's wait for the final result, guys. And eventually price smashed our TP. You can see it over here. Price smashed our TP. As easy as that. You can be able to trade as a swing trader even though you are busy.